Mortgage rates are scaring away some potential home buyers. Now there's an incentive to woo buyers that's growing in popularity, mortgage buydowns. So what exactly are they? News 4 San Antonio's Chelsea Torres spoke with a real estate expert and joins us with the answer. Chelsea?
Well, a local realtor tells me 80% of his clients are doing mortgage buydowns. It's a buyer's market, which means sellers may be desperate to help a home buyer on a better price for their dream home.
If I held on for too long, I don't want to miss out on the chance that rates are going to go up to 10%. And at least right now, I'll lock it in at 5%.
Enrique Meñadas decided to move to San Antonio when the rest of his family did. With several homes waiting to sell, Meñadas' builder offered $15,000 in closing costs. Half was used for a mortgage buydown rate.
So instead of me getting like a 7% interest rate, I ended up getting a 5%.
It's a buyer's market, according to his realtor, Jonathan D'Angelo from First Choice Realty, who says in his 10 years of real estate, more home buyers are looking at mortgage buydowns.
You can leverage the builder, you can leverage the concessions that you ask for with the seller.
A mortgage buydown will temporarily relieve a high monthly bill. So look at it like this. No concessions on a $300,000 home and 7% interest rate will give you just under $2,000 a month. A price cut on a home and 7% interest rate only shaves off about $50. But a buydown or mortgage rate buydown on a $300,000 home gives you a lower interest rate, resulting to a monthly payment that is nearly $400 cheaper. However, San Antonio Board of Realtors says it truly depends on each buyer's situation.
It is starting to be more common. And again, it just depends on the particular scenario, whether it is best to see that credit on the closing costs or, doing something like buying down the rate.
A buyer will have a lower interest rate for a set amount of time, say 1 to 3 years. However, at the end of the term, the mortgage goes back to what it was locked in at, resulting in a higher monthly bill.
And if they do go down, then good for everybody else too, but also good for me because I can always get that mortgage payment to go back a little bit lower,
We always say you date your interest rate and you marry your home.
So after the mortgage buydown term ends, the full payment amount could actually be more expensive. A home buyer can refinance for a lower rate, but it's not always guaranteed, so buyers must beware. Chelsea Torres, News 4, San Antonio.